Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 22nd. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with my market analysis. I do the same thing in these daily market commentaries, but I'm going to go a little bit further and talk about my option strategies that I'm using on a daily basis in my portfolio, talking about how I trade over 25 years, from the Chicago Board of Trade on the floor there to, trading in my home, probably like you guys are. Well, also, I've streamlined the process for you folks in order to find the right strategy for any given assumption you come up with. So please check those out in the webinars. Just did one yesterday on a long call calendar. Great setup for next earnings, how we take advantage of volatility, all of those things, great things to check out. So please check that out as well. All right, so let's talk about the economic data. And we might skip through these charts really quick and talk about my portfolio because a lot of things going on over there. All right, so Great Britain retail sales coming in at 0.3%, lower than the expected 1.4%. So a big miss there out of Great Britain. But we got the flash estimates. Now we talk about the PMI numbers, my favorite numbers of the month coming out today. Flash estimates for the European regions, really what we want to look at. United States, we look at the ISM Institute for Supply Management. Now, having said that, we do get our own flash estimates, so it's still good to look at. So we'll take a look at those as well. So everybody getting their flash estimates today. French. So remember, another thing to say, anything above 50 is expansion. Anything below 50 is contraction with these numbers. And in Europe, the main manufacturing sectors of Europe are France and Germany. All right, so let's get on with it. All right, flash services PMI for France coming in at 46.5, expected to be 48.3. Now we also got their manufacturing for France coming in at 51.5, expected to be 50.6. Again, above 50 expansion, so that's good there. We also got the German flash manufacturing coming in at 57, right on the nose with expectations there. The service sector PMI for Germany coming in at 46.8, but that is higher than the expected 45. They did revise last and it was lower than last month's number. They did revise last month's number down slightly. Their broader area of Europe, excluding basically Germany and France, right? Because they drilled down on those. But basically the broader European area coming in with their services manufacturing at 45.0, higher than the expected 44, and the manufacturing coming in at 54.7, which was in line with expectations. All right, that was a mouthful. Now back here to the United States to talk about our manufacturing PMIs for the flash estimates. Coming in at 59.1, manufacturing 56 was expected. Revision to last month's number up slightly, and the services, we are more of a service sector here. Coming in at 57.3, expected to be 53.0. Oh, existing home sales coming in at 6,760,000, expected to be 6,500,000. Nice to see there. It seems like the housing market's doing all right. Natural gas storage's drawdown of 187 billion cubic feet. It was expected to be a drawdown of only 162 billion cubic feet. Finally, crude oil inventories, a rise of 4.4 million barrels, expected to be a drawdown of 1.2 million barrels. Now, production continues to be the same. I wanted to look and see, I haven't had a chance to, crazy morning, all kinds of family stuff going on over here. So I haven't had a chance to really drill down on these oil inventory numbers, but the production numbers were remaining the same. So I'm assuming with that type of build on supply coming into the chain, we are still keeping production the same. The demand for the crude oil is not really there. So that's why we're seeing a big sell-off right off the bat in crude oil. We're getting a little bit of a bounce here, but back below that 9-day simple moving average immediately off that number there. So I'm still looking for crude oil to come off. We've tested that 55 a barrel area. It's been rejected. It's ridiculous in my eyes that we are up here at this level right before the pandemic, when the economy was like on all cylinders. We weren't even at that level. So to me, this is just well overdone to the upside. But, you know, it is what it is. We always say the market can stay irrational longer than we can stay solvent. So there it is. But I do feel like that's kind of creating a top there. Gold having a bad day, coming off today by about $12. My portfolio is not loving any of the market's movements today for the most part. Bonds I don't have any position in, but they are moving a little bit higher, but getting very comfortable right in and around those 60, high 60 handles there. Volatility, we could say it's increasing a little bit, but well off the highs. As we can see, the markets are making a bit of a rebound. I have all this broken down because overnight the markets really started selling off. As you can see, we tried to make a bit of a bounce in the morning. Did come in, sold off quite dramatically. Pretty crazy morning. Now we're starting to see a rebound. Buying into the day would be nice to see here in equities for sure on a daily chart. I wanted to pull that up as a daily chart there. I'll flip this NASDAQ over. We can see NASDAQ having a rough day. But again, very bearish, a lot of bearish undertones in the markets, maybe led by the crazy stuff we saw in Intel yesterday at the close, and then IBM. Oh my gosh, I just want to get to talking about those things because that's the nitty gritty of what we're really getting at right here. But all of these markets with this kind of market action, even a rally into the close making the highs, could make this look like a top, and we're going to start making another move back down towards this trend channel. So, you know, protection on, possibly a good time here, and volatility is really low. So all of those things going on in and around the markets. You can see the E-mini S&Ps yesterday made that topping pattern. Today looked like we were getting that confirmation move here, but with a move up to the highs here, and this one, you know, again, trying to read the tea leaves, we're above the 9-day moving average there, and we could see that it would be a continuation pattern. When we talk about that, you know, two opposing dojis, you know, you get a topping doji, like a spinning top doji or something like that. Now you get like a hangman doji or a hammer doji and a hangman doji, whatever. All of them kind of look the same, really. That would look like a continuation pattern. All right, let's get on to talking about the breakdown. Same thing, bearishness overnight, trying to make a rally into the close in all of these markets. All right, so make sure I got my Intel up. All right, so Intel, basically I have this on the, right here, what was it? It was, basic, you know, this is on Arizona time, so keep that in mind. So right here at about 120, I put on my Intel trade and went to getting ready for the webinar that I do on Thursdays, as a lot of you guys probably watch. Anyway, so I went in there and sold the weekly, the January 57 puts in there for 43 cents. Now, I was kind of looking at the charts and saying 57 was kind of right around an area where we would find support here. Well, I go back. I basically shut all this down, pulled up the webinar, went through all my slides, and they did an early release of their earnings. They did beat on those earnings. And then basically people were talking about it being kind of some kind of a sham, because there was a lot of volume coming into the markets at the end of the day. And you can see this trajectory, like it was kind of somebody knew or got leaked really early to somebody else and then released early to the public. So that was a bit weird. I probably could have gotten out of this yesterday, obviously much better than maybe I could have even today, but I got out on the open. That's part of the rules that we talk about with this earnings videos that we've just done, and the earnings videos. I've done courses on just trading earnings, so make sure you check that out because I don't drill into that here. Anyway, with that said, we get out of these early, and I was able to get out for 13 cents. Now, I could have gotten out of those again, probably about a nickel better, I think. But I was working it for a couple of pennies, and thinking I was going to get hit as the market would rally, but it started losing. So I chased it, got out for 13 cents. So a nice little winner. Now, trading 101 here. I know I'm probably going to get a little bit long, but look at this. I threw up a chart. IBM. This is the trade that I got interested in trading options around. All right. So I was in college. I basically had some money. I invested in IBM. I actually deposited it in a bank account. The guy there was part of this discount brokerage part of the firm, and he was like, hey, why don't you invest some of this money? And so I did. I invested in Walmart and IBM, and they basically, both charts are probably about exactly the same as this. They don't go anywhere for the last 20 years. So if you're ever thinking you want to get interested in trading options, especially like around a portfolio, IBM is probably one of the quintessential ones to do it in and around. Now, having said that, never carry an IBM trade into like a long position into their earnings. That is trading IBM 101, all right? And take it from a guy who started out trading IBM and has never stopped trading around IBM. I can't get enough of it. I don't know why. Maybe because it doesn't go anywhere and it's so fun to trade covered calls against, sell some puts, blah, blah, blah. Whatever happens during this, it's not really going to go anywhere. You're not going to make a ton of money, but it's fun to trade around. Having said that, don't hold a long position in IBM going through their earnings. They always go down. And I know that from trading it for 20 years, more than 20 years probably now at this point. Anyway, so I have that on the very long dated chart there. Let's go back to this because look what happens on their earnings. Now, I am long IBM for so long, trading covered calls around this. This is one of my things that I have in my portfolio. So, you know, I can't even tell you how long back it was where I had even gotten involved in getting long this trade here, but I've been lowering cost basis on it forever, selling puts, selling calls against blah, blah, blah. But the bottom line is you don't want to really go into earnings. Long IBM, which I did this time, and look what happened. I mean, every earnings, you can just see it. So I made a mistake, rookie mistake there in IBM. It fell out of bed, but it's back to looking to start putting on some covered call strategies. I mean, I'm still net positive in this, especially with all the lowering of cost basis on it, but I should know better than doing that. So rookie mistake. We all make those mistakes. This was mine today. But at the end of the day, I'll just get back to work on this, lowering cost basis on it. But if you're ever thought about getting involved in trading options around a stock, especially think about IBM, Walmart, they're great ones. Covered calls, sell the covered calls at 125, 135. You get called away, then basically you start selling the 100, 100, something like that, to buy it back. 100, 110 puts, buy it back. Just keep doing that cycle. All right. Hopefully you can take something away from that. You know, give me a thumbs up if you like this video. Also, questions, comments, anything down at the bottom. I will be happy to respond to you guys. Thanks for watching. And if you can't take that, take it easy. Oh, by the way, check out the disclaimer. All right. Take care now.